Patrick, John. Shorts are happy today, that's for sure. All right. All right, just give me a couple minutes. Get everybody set up. All right, I think we can start. Let's see. Right, well, welcome Discord users, FTLT, how are you? Black Zero, Valhalla, welcome. All right, let's start. Go to webinar, guys. Robert, Claude, Tad. Good morning, Osama. John, thank you. Delta Airlines puts. Well, I don't know about that. It looks like Delta Airlines is actually going down, but we'll see. All right, let's start. Welcome to TradeSpoon and Yellow Tunnel. My name is Vlad Karpel. Today we're going to have a live trading room open to trade stock and options using current technology and talk about current market volatility. CPI data just came in, hotter than expected. Market is volatile as expected, right? We talked about that for the few days. We'll see where we're going to close today. So we need to decide what to do next and how to adjust some of our positions. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first on Discord. Please use stream chat. Type in your questions. I'm here to answer any questions you guys have. Same on the GoToWebinar platform. Please type your questions. I'll be more than happy to answer them. This is my brief bio. Worked in financial industry for basically all my life since I was 20, so 27 years. I've been managing and trading my own money most of that time, over 20 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures: trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, live stream. Please type in your questions inside of stream chat. All right. Okay. So very important to have a pre-market routine, right? You ultimately don't know how the market will close today, right? CPI data is worse than expected. We could continue going lower. We can reverse because a lot of people now expect that this is probably the last months where CPI data is worse than expected. So it just depends where the bulls and bears is going to end up in terms of their tug of war. So first, you need to concentrate. I propose to concentrate on things that we do have control over. What do we have control over? One is cash. It's clearly that inflation is here to stay, right? Maybe it's going to increase next month. Maybe it will decrease, but it's not going to be 2% target rate. So most likely volatility will persist, right? We're starting earnings season. Pepsi announced earnings, Delta Airline, Fastenal, JP Morgan tomorrow. So we have PPI data tomorrow. So the volatility will persist. The question is, how much effect does the inflation and strong dollar have on the earnings, right? S&P 500 earnings. That's now the elephant in the room, right? So that's the unknown, right? So since volatility is going to persist, number one rule, I propose cash, 50% of the portfolio in cash. We had a lot of questions where, I propose to have 4 positions times 2.5% maximum loss of account value, right? So if you're trading options, right, and let's say you have 2.5% of your account value per position as the maximum loss, right? Times 4 positions, let's say buying calls, that means 90% of your portfolio in cash. And usually the new traders or somebody who haven't been trading long enough in volatile market, right away the assumption, well, I have 90% of the cash. What am I going to do with the other 40% of my cash, or or 90% of my cash if you don't want to have cash? So I think that's the biggest pitfall of and most common mistake. Because without when you trade in stock, this is 2.5% loss, right? So you have to, if you invest $100, I propose don't lose more than $2.5 on your investment, but you still have to invest $100. But you can buy a call for $2.5 and then 90% of your portfolio in cash. But in reality, when you buy when you buy a call for $100 stock for $2.50, you're still investing $100 in the stock market. Don't think about that you only invested $2.50. Because when market moves, all asset classes move. And if you have, instead of 4 positions, you have 10 positions at 2.5%, then very quickly you can lose 25% of your account value, right? And that's I think the biggest misconception about the options. Options are derivative of the stocks. When you invest, you should think about the investment of equity, irrelevant what you're trading, whether you're trading future, forex. All these instruments are just extra leverage, or Bitcoin or NFT for that matter. This is just extra leverage of underlying assets. And I'm not implying that NFTs have some underlying assets, but they are highly correlated to the equity market, right? So they ultimately will be affected by the equity market. So that's the main thing that we all can concentrate on. 4 positions, 2.5% maximum maximum loss. So let's go through specific examples. So before market opens, I would encourage you to go through specific setup. Right, so I'm looking at S&P futures. We had hotter than expected inflation print. So where do we see support? So there are 2 types of traders, right? You can be a day trader, short-term trader, right? And you can see the July low is clearly around this level that we actually touched today, right? So around 374, 373 on SPY, and 374 on the 3740 on S&P futures. So it's important to keep that level intact, right? So by end of the day, if we're closed here, I think this is a win for the bulls, right? Bulls are able to hold on to July low. If we're closed here, right, this is a win for the bears, right? Most likely, we're heading lower. We do have PPI data tomorrow, probably also not too far from CPI data. We have retail numbers on Friday. Our president is going to the Middle East to try to get more oil produced by Saudi Arabia. That could, spark volatility in the market. So as long as we're staying above this level, bulls are in control, right? We're printing higher lows, right, and higher highs. If we drop below this level, then bears are in control. So if you're a day trader, I propose to have this is your stop loss, right? This is your stop loss. If you're a day trader, you probably don't want to risk 2.5%. Usually it's less than 1%. Some people risk 0.5% of their account value when they do day trading, some 1%, but it shouldn't be more than 1%. If you carry position overnight, you're holding position for a couple of days, right, or a couple of weeks. This is July low, right? Then that could be your stop loss, right? That could be your stop loss. Or if this level doesn't hold, then if you're more conservative, then this is your support, right? Around 363, 362 is your stop loss. So let's say you put on the position in the past couple of weeks, right? And your stop loss was 364, right? So from 376 to 364, let's switch to spiders. Let's switch to spiders. Right. $362 support. There really no, if 362 doesn't hold, we will probably go into 350. We're probably going to undershoot again by 5% or something like that. So 350, 340 is probably your next support. So you look at the 364. Let's say you entered this position yesterday, right, at 380, right? So 380 roughly to 360 is your stop loss. That's 20 points, right? $20 points is your stop loss. I propose on a $10,000 portfolio not to risk more than $250. 2.5%, right? If you're doing day trading, I would propose to risk less than $100. If you're holding position overnight for a couple days, couple weeks, couple months, doesn't matter. No more than $250. So if the risk right now, you enter the position at 380, your stop loss is at 360, 20 points. I propose not to risk more than 10, 12 shares, right? 10 shares. This way, you know that, let's say, market continues to sell off, right? And then we will retest 362 or break this. Your maximum risk is $200. As I said, probably using dollar cost average is my favorite strategy, right? Because you ultimately don't know what the outcome of CPI data is. It could have been 8.3. It could have been it became 9.1. So you don't know, right? So then I actually thought it would be better than expected, but I was wrong. But anyway, we'll do the same exercise next month. But so then for that reason, since you don't know for sure, I would split this 10 shares into 5, right? I would buy 5 shares here, right? And then I would buy maybe, if you think 362 will hold, right? And we are approaching close to 362, or if you think 372 will hold, this is where you buy your additional 5 shares, either here or here, right? Additional 5 shares. This way, if market does break through this 360, you down, less than $250. So that calculation is extremely important. I encourage you to journal and write this down inside of the journal. You will see that today all of the asset classes are highly correlated, right? So let's look at materials are down 1.5%, home builders are down 2.5%, metals and miners half, industrials down 1%, energy is actually slightly higher. Again, on the inflation data, semiconductors down 1.5%, Russell 2000 down 1%, spiders 1.8, and technology 1.8, spiders 1.3. So you can see everything is moving in very high correlation to each other. Right? So for that reason, I propose to have no more than 4 positions, right? So you go through this calculation, you have no more than 4 positions. You can trade ETFs. Maybe you think oil will outperform technology, or maybe you think consumer staples will outperform spiders. Fine. You can pick either ETFs or you can pick individual stocks. Maybe you like to trade Apple. Maybe you like to trade Coke, Procter & Gamble, or you want home builders, DHI, whatever that is. 4 positions, just realize they're going to move in highly correlated to each other. Out of these 4 positions, I propose right now to be probably market neutral. We'll see where we're going to close today, but maybe you have 2 bullish positions, right? And you have 2 bearish positions, right? If CPI is worse than expected, then you're closing your bearish position once you feel that the market is reaching some kind of a support and stabilization. If market rallies, then you close your long position. But you long and you short the market at the same time. And you can express bias, right? If you're going into CPI print, like I did, and you think that CPI data is going to be better than expected, then you have maybe more bullish positions than bearish, right? If you're more bearish, like John, then maybe you have more bearish positions than bullish. But you want to be long and short the market because based on, just even perception of the inflation, right? And market can close positive today or it can close negative, right? Any questions so far? How's our Discord guys doing? Discord users, any questions? Mac88, welcome. Wahala, welcome. We have new users, love it. Thank you. Please type in your questions inside of stream chat. Let me know if you guys can hear me. Should be able to hear me and see me. We'll say hi, please type any questions. All right. John, thank you. Albert, good morning. Sunil, thank you. Really not surprised. Okay, harder than expected. I mean, let's do the updates. So the question about CPI data. The expectation is 1.1, right? Median forecast months consumer price it was 1.3, so it was worse than expected. The year-over-year was expectation 8.8. It's 9.1, right? And core CPI expectation 5.7, 5.9. So from what I've listened to the news, mainly it's again energy prices, right? And rents, But we all know that right now oil prices have collapsed, right? It was average, price at the gas pump was, what is it, 5.4, now it's 4.8, and it's continued to drift low, right? Oil drops, at least 92, it was at 120, so 30% drop, right? So 30% drop in futures, oil futures, the crude oil, the prices at the pump didn't drop 30%, but they're dropping. They dropped, and they're probably going to continue dropping for the next print because this drop started, it started in June, but there's some delay. So probably the August CPI data will reflect these lower prices for the months of July. So that's kind of the discussion right now. Market is always forward looking, right? If they think that the next month's CPI is again going to be harder than expected, then probably market going to continue to sell off. But if they don't, then and also the idea is what will Fed will do, right? Will the Fed raise interest rates in July meeting by 100 basis points? The market will continue to go lower. If they think no, they're not going to stay the course. 75 basis points in end of July, September 50 basis points, then maybe market will recover, right? So that's kind of the consensus. All right. Any questions? Some of the other rules important. Wait for 2 to 3 days to confirm trend change, right? We see this whiplash every single day, right? So I would look at the spiders, right? You look at daily chart, day 1 lower, day 2 lower, day 3 lower, right? That usually means that bears are in control, right? We had a bullish recovery, right? Strong rally, 9% rebound, day 1, day 2, day 3, day 4. Now kind of trading in the range, and now day 1, day 2, day 3. Again, if we close below 374, it's or this line 373, clearly bears are in control. 3 days of lower lows. Yeah, we can rebound, but this is probably here to stay for quite some time. If we do close above that line, right? If bulls are able to push the market higher, then then the trend hasn't changed, right? So I would look at the stock forecast toolbox, right? That's my favorite indicator. Going into the CPI print, right? This is data effective of yesterday, right? Each data point is one candlestick, daily candlestick. So market doesn't know about CPI. Model has no idea about CPI. It's clueless about CPI data. But based on the demand and supply between bulls and bears, going to the CPI print, it sees support at 375, overhead resistance is at 385, right? And bullish momentum. So model sees that the market is, bulls are in control. Now we have CPI print. Model, it will take 2 to 3 days to adjust, right? It will take 2 to 3 days to adjust to this new CPI data. And again, depends on, if we're going to close above 375 that the model predicted, then this trend is intact. If we're going to close below 373, then this trend is going to start decreasing and turning negative, right? So that's how you would look at this data. And same thing for 6 months, right? When you look at the 6 months prediction, strong negative trend. It will take, 6 months, each data point is 1 month, it will take at least 1 or 2 months, probably 2 months or more, to reverse the downtrend that we currently have in the market long term, right? So short term, bullish, long term, bearish. A lot of people ask, why is such a disconnect? How can the model show, bullish, bearish at the same time? Well, it depends how much data you're analyzing and what your time outlook is, right? You can be bullish for the next 5 days or 2 weeks, but you can be bearish for the next 3 months, right? So 3 weeks you're bullish, 3 months you're bearish. And so just models analyze different data and give you different forecasts for different data. Same thing was, same thing was the, when you look at the chart. And that's a very common question. All right, any questions? FTLT, can you hear me? Black Zero, let me know if you guys have any questions. All right. William, thank you for the question. John, thank you for your question, for your comments. Raymond, good morning. Yuri, good morning. Carmen, good morning. K1, I'm not sure about form K1, maybe S1, like quarterly earnings, but I'm not familiar with form K. All right, thanks for balancing entire portfolio down. Very nice. That's great. I do have buy and DHI into the print, right? Question on aggressive trader. Always remember that model does not know that there will be a CHI, right? Models don't look at the announcements, right? Like CPI data. So it is showing that DHI is an uptrend going into this print. Now you have strong, you have a hotter than expected inflation, right? You have yield inversion. 2-year yield is now by 16 basis points higher than the 10-year yield, which is extremely bearish, right? And yields are higher. So DHA is lower. So you have to be careful with following active trades. Again, I propose in active trader, you wait 15 minutes, right? This is a 1 to 2 day predictions, and you wait for the first, and you look at the pre-market futures, right? If the pre-market futures are down, where they clearly were as a result of CPI data, now you wait, right? And I would wait 3 candlesticks, right? 3 5-minute candlesticks. If you see some kind of a stabilization and you see maybe 71 is your support, maybe if it retraces back to suggested price is actually 73, right? It's significantly lower than that. I would probably not enter position now, right? It's been 15 minutes. Kind of try to close the gap. Now reversing back. If it reaches 71 and you're still bullish and you think this level will hold, only then I would buy. So always be careful with any models or any analysis going into some kind of an event, right? Model says, today we should, positive trend, it predicted only 0.5% drop today, right? But in the next 10 days, it sees potentially market going higher by 1%. But that doesn't mean that's where we're going to go because of its new information in the market, such as CPI data, right? So something to keep in mind. Oh, what is significance of 3? This is just my experience. I know that the first 15 minutes, institutions come in, hedge funds, they are putting a lot of trades, right? And it's very chaotic, right? Very hard to predict. But after 15 minutes, you can actually see support, right? You can see DHI support is at 71. You can see overhead resistance is at 72. You probably have little room to the upside and you have a lot of room to the downside, right? So that's how I would look at that's why I usually wait for 15 minutes. Because if you don't wait for 15 minutes, you just enter, especially if you don't look at the pre-market futures, all of a sudden, well, it's down 3%. And you're like, well, you said it's a bullish pick. Why is it down 3%? right? It makes sense. So you do have to understand limitations of any models. Doesn't matter which system you're using, right? It's clearly, going into the print, going into CPI, if you look at 1 hour chart, you can clearly see it's this very strong uptrend. It outperformed almost any asset classes. I don't care, Rivian and, Bitcoin and Zoom and whatever the popular stocks are. DHI is, home builders are probably one of the strong, it's June high, one of the strongest sectors. So model detected that, but that doesn't mean it's going to stay in this uptrend, right? Up 26%, right? I mean, it's pretty incredible. But that doesn't mean it's going to stay that way, right? But because of the CPI, but it's showing you that this is the stock that has outperformed majority of the S&P 500 stocks in the past few weeks, right? That's how I would interpret this information. Model plus common success. Remember, models are tools, right? Just like learning to drive, right? Yeah, I can give you accelerator, I can give you speedometer, I can show you how fast you're going, and what your speed is and how much oil you have in your car and what your fluid brakes looks like. But guess what? You have to drive the car, and unless you press the accelerator, you're not going to move, right? So you have to make a decision. And if you see a car in front of you, you have to stop, right? Even though accelerator says keep on going, right? But if you have some obstacle in front of you, you have to bypass it. You have to make a turn, right? That's why Elon Musk is spending all this time on autopilot, right? And we're probably going to be far from having full autopilot, right? Maybe not the best analogy to stock market, but you get the point. You have an autopilot, great, but guess what? You have to keep your hands on the wheel. And if you see obstacle or if you see yellow line that is broken or it's in the rain, well, you got to take control and you got to move the car. Models in stock market do the same thing. They'll tell you certain momentum, they'll give you acceleration, they'll give you how much oil you have, how much brake fluid you have, but you have to make the decision, right? You have to figure out when the obstacle like CPI data is ahead of you, and do you want to turn left, do you want to turn right, do you want to go back? That's the analogy, right? Don't assume that there's a magic model out there that can be accurate 100% of the time and always tell you when green is green and then red is red, right? That doesn't exist, because if it existed, we probably won't be here on this webinar, right? Master Mango, all right, welcome. Love it. All right, more people joining on Discord. Love it. Okay, now nice and wonderful. Let's review let's see what's happening. Good news, bad news. Good news, 10-year yield is trading in the range, right? Before every CPI print, just continuing rally in the treasury market. I mean, it is up, but still pattern of lower highs, lower lows. Narrative is changing, right? Yes, CPI is higher than expected. Inflation is, out of control, but nobody really cares about that. Now, based on what you see in the treasury market, everybody's concerned about, well, what will JP Morgan, what will Delta Airline announce? What will Pepsi announce in earnings? What will JP Morgan, is it single-digit growth, double-digit growth, negative growth? So yield is stable, and that's positive, right? It's not below 275, right? That's the main support. It's not falling off the cliff. It's not going higher. So I would say yield is positive. Yield inversion long-term, right? Long-term, very negative, right? That's the sign of recession. So long-term, that's one of the reasons to be bearish. Short-term, probably one of the reasons to be, kind of bullish. Dollar is out of control, right? It's, euro and dollar is at parity, safe haven. People are just flying to treasuries, and a dollar, right? And again, you have this divergence, right? Treasury is down and technology is down. That was the theme for the first 6 months, but for the past, 3 to 4 weeks, that has not been the theme, right? So either technology is gonna either the treasury is going to rally, right? If the technology is going to continue to go down, treasury, right? Let's write this down. That's important, right? We're now kind of in a usual correlation, right? You have two markets. You have treasury market, TLT, ETF, and then you have, spiders market, equity market. And they're usually inversely correlated, right? People either hide in treasury and market TLT goes up, and spiders, going down, right? Inversely correlated. That is the usual correlation, right? This is usual. Unusual, usual, then unusual. I don't know if there is such a word as unusual. It is, but unusual is what we're having today and what we had for the first 6 months, right? TLT is going down, right? That's why a lot of wealth managers are scratching their heads, right? Because the usual model is 40-60, 70-30, whatever the usual models. But if spiders have been going down for the past 6 months and treasury has been going down 6 months, all of a sudden your hedging didn't work in your traditional wealth management model, and you're down significantly, right? And you get a lot of phone calls every quarter from your clients saying, like, what happened, right? This used to work for the past 40 years and now it doesn't work. But so now I think we're back to the normal mode, right? So that right now this is bulls and bears are fighting. So either the treasury gonna reverse, TLT is gonna rally, and QQQ will continue sell off, or vice versa. QQQ will turn positive, right? QQQ will turn positive, and TLT will move. So dollar and treasury, very important. Yield, right? Junk bonds, high yield corporate bonds, very important, right? We're off our lows again. We gave up support, but still trading higher lows, right? So that's positive. VIX is kind of, complacent, right? This is the bear argument long term, right? There is a disconnect between how bearish everybody in the market and then, why is volatility relatively low, right? Why it hasn't moved since the beginning. It's the same volatility we had in December, but a lot has changed since December 1st. Why are we still at 27, right? So that's their argument, that we have a disconnect between what people say and what people do, right? And that ultimately is a setup for for a bear trap. All right, and what else? And Russell 2000 is outperforming, closed the gap almost. That's kind of positive. ARC is still, even didn't breach yesterday's low, kind of positive. Gold miners are weak. XME turned positive. Oil turning positive. So some, bulls and bears are scratching their heads basically and trying to figure out, what do we do next? That's how I would interpret this. All right, let's go over some trades. It's 8:55. Any questions? Discord, guys. Wow, we have a record day today. Doesn't even fit on my screen how many people we have. I'm still under understand why Discord users don't type in questions. You guys just cannot hear me, or you just don't have any questions? How is this possible? FTLT, can you hear me? Can you type in something in the Discord side of the live stream? Well, the other explanation is that, most of the people on chat are like, under, because we type in the chat box. Well, nurse light. All right, now you guys type in. That's it. That's good. FTLT is because on interpretation we type in the chat box. Where's the chat box? Oh, chat, regular chat box. I don't see anything in the chat box. Let me see chat room. Yeah, chat box. I don't see anything in chat. Well, now you guys are typing, so that's good. So maybe I just need to make fun that you guys are much younger than people on GoToWebinar. I always associate Discord with, my, people playing video games like my kids, but I know that's not the case. So, but if I make fun of you, then I think you guys are gonna type. All right, now I see some typing. Okay, good. Stream chat. Yeah, don't be shy. All right. It's because we type in the chat box on the presentation screen in the right corner. Why don't I see it? Okay, FTLT, you'll show me. Maybe I'm missing some of the messages. Video presentation screen, okay. Let's see, yeah. All right, so let's go over the positions. It's 8:57. All right, so again, for now, I would just, because right now it's just important to see where bulls and bears going to settle at the end of the day, right? But let's see. All right, so one trade is Delta Airline, right? One way to trade is, again, everybody's asking what's the most popular trade, what works, what doesn't. Usually it's selling premium out of the money premium, right? So here's an example of Delta Airline. So I sold the 25 put for 19 cents, closed it for 6 cents, sold it again for 23 cents, and at the same time sold calls for 18 cents. So I collected 18 plus 13, 31 cents, and another put 45 cents. So right now, position is slightly down. I'm down maybe 20 cents, maybe 15 cents. I sold 28.5 put. Delta Airline is trading 28.8. So it's down 7%. We have Cpi Data, market can reverse. This is where I want to either close. I want to close the trade probably by the end of the day. I don't want to take the risk going into Cpi Data because market can reverse. So, and right now it's trading almost at the money. We can have another day of down 5%. So I'm going to put an order to try to close position for, let's see, for now I'll put an order for 20 cents. But by the end of the day, I'm going to close either, with the hope that, market might continue to recover, right? Delta Airline might continue to recover. Looks like it's not. Looks like it's going lower. But if it tries to close the gap again, like with not the gap, but get back to this 29 level, then I would close the trade. So that's my strategy on Delta Airline. So try to close this 28.5 put because it sold off significantly, right? 8%, more than it usually does. So that's the most favorite strategy, right? Collecting the premium both on calls and puts, right? You do 2 times estimated move, trying to collect, 0.5%, 1% of underlying stock price, and that will be the trade. So we have to watch Delta Airline and see how it's going to close by the end of the day. All right, so that's Delta Airline. FCX down 2%. It's retesting the recent lows after the CPI data. Again, very sensitive to interest rates. For now, I guess for the majority of my position, I'm waiting what's going to happen next, right? I don't really know if this level will or will not hold, right? It looks like 372 level, the July low is holding. As long as the July level is holding, then, on my bullish position, I think it's too early to close them, right? If we have, if the second half of the day, close If we're going to close below this level, then I have to probably start trimming some of the long positions, because if this level doesn't hold, then more likely than not, we're going to 362 and lower or lower. But as long as we're above 372, I'm probably not going to make a lot of adjustments, especially in long-term positions. So FCX, again, using dollar cost average, different cost basis, 38, 30, trading 26. Still have the long calls out of the call spread. So that's the position I'm managing in FCX. IWM, again, example where bullish and bearish at the same time. It straddles, right? A lot of people, if you anticipate a large move as a result of CPI, then you have a straddle, right? You have 180 call, I had a call spread, 180, 190 call spread, and at the same time, I have 160, 150 put spread. Going out in September to give myself more room for trade to go in my direction. But again, I'm long and short at the same time. If IWM reaches recent lows, then I close 150, 160 put spread. If it bounces back to close to 180, I would close the 180 call. That's IWM. JP Morgan, again, doing the earnings strategies, selling credit put spread, 108, 109. So I sold 108 put, and JP Morgan announced earnings tomorrow. It's down 1.5%. I mean, still far away from the 108 put. Again, end of the day, I will have to make a decision. Maybe close the 108 put, roll it down, or close the position entirely. We'll see where we're going to close. But so far, it's still out of the money, but trade is going against me. Accidental looks like it's recovering on the hotter than expected inflation. Using dollar cost average, still in the trade, either accidental or XOP, right? You can trade stocks like accidental, or if you're not feeling comfortable picking individual stocks, or you have a smaller count, then you can buy options, right? So I have 145, 150 call spread. I'm still long going into September. We'll see, how this week will end. So that's XOP, accidental. Pepsi, again, I closed the call spread. I still have a put spread. Let's see, how's Pepsi doing? So it's a credit put spread, 160 put. We're trading at 168. We're still far away from the 160, $8, 4%. So for now, I'm just waiting for that order to get executed. Let's see. Delta Airline much closer. Pepsi, further away. So I have an open order trying to close it for 10 cents, right? Was able to collect 48 cents and 38 cents on puts and calls. So that's Pepsi call. Still have a large QQQ position. That's probably my largest position. I'm bullish. I think 280 on QQQ will hold, right? That's kind of wait and see. I think actually just close the gap. So it's positive. Let's see if we can take over the gap. So that's good. QQQ just closed the gap. I'm pulling back now, but again, I think the 280 level will hold. So we revisit this level now. We have 276. If we drop below 276, right, July low, then I have to make a decision whether I do want to hold that put spread or close it. But at the same time, I do have a hedge, 280, 260 debit put spread, bearish, and 240 put. Right, so by December, I think market will break the 280, but by September, I don't think it will happen. So, but again, important to be long and short at the same time, because if I'm wrong on the 280 put, at least some of my losses can be mitigated by this December 280, 260 put spread. Any questions? But we're not going to have probably VIX panic until earnings kick in. I haven't heard about JPM color monthly or quarterly trade, to to balance assets. Yeah, some I doubt it's going to have any impact on underlying stock. Why has TLT and tech went down today? Well, primary reason is hotter than inflation, right? Hotter than expected inflation. Interest rates are higher, right? And QQQ is down, right? So the main reason is it's a repeat of the first 6 months. But we know that in the past couple of weeks, this trade hasn't worked that well. So I assume either there will be a reversal and Treasury will drop, right? At some point, maybe Treasury will continue to drop, right? You see they're off the session high. And either the Treasury is going to continue going lower or technology is going to continue going higher, right? We kind of closed the gap first time, which is pretty impressive for higher than expected CPI. And we'll see where we're going to close, right? But that's, these are different markets, right? Equity market, Treasury market, usually they converge, but right now they're diverging until, dust settles. Raymond, Google long position. QQQ and Google should go in the same direction, right? Right now they're down 1.5%. Let's see, Microsoft is probably down. Microsoft, same thing. Apple a little bit better. Tesla much better, actually closed the gap. And Amazon also a little bit better than technology. So, Amazon, Tesla already closed the gap, right? They're trading, above, it pulled back from session high, but still positive. So it's my opinion on, QQQ is the same for Google. Google maybe will outperform QQQ, but the same idea, right? It needs to hold these lows to 76, right? If the QQQ trades up, as long as QQQ trades above to 76, we have higher lows, then there is a chance that we will break this level, right? Especially when dust settles, right? QQQ already closed the second gap 2 times. That's a major overhead resistance, right? But as long as it's trading between 296 and 276, it's nothing really happened, right? We have bad news that reaches 276. We have good news, or kind of good news, or not as bad news. We reach 296. So right now it's trading in a clearly defined range, right? Between 296 and 276, right? July low, July high. Thank you, Raymond. Summer earnings tomorrow. We have JP Morgan after Morgan Stanley TSM. Thank you. Fastenal worked out well. Look, it is off a bit slow. All right, let's see. Can you close it? That's the question. So I also did it in my account. Let's see. I assume you sold 45 put, Bob. Let's see. You can close for profit, but still, you have to wait. Thank you, Bob. Sunil, all right. Point well taken. If the trade is going against you, how long do you hold it? If the trade is going against me, how long do you hold it? Very simple rule. I look either at some kind of support resistance level, right? Let's say clearly 373 is a support. There's not really much room to the downside. This is my stop level. This is one trigger. Is my stop level that I decided before I entered the trade. The second one is the 2.5%, right? I propose that if you're down 2.5% on one of your 4 positions, then you exit the trade, right? Because you don't, if you're down right now, let's say on any of the trade, Google, right? You don't really know where the market is going to go, right? We already closed the gap, right? Let's look at Google. Well, didn't close the gap, but got close, right? So we can close the gap and continue going high, right? That's one scenario. The other scenario, hotter than expected CPI, and we're going to retest June low, right, which is around 2,100. So you still have 150 points to the downside, which is what? I don't know, 5%, right? So we can drop 5%, probably by tomorrow, right, or Friday, or more, 6%. So if you're down already 2.5%, you don't want to be down additional 6%, right? So if you're down 2.5% on Google position, I would close it, right? Trade went against you. You probably had. I would encourage you to look at think about position size again, but I would be out of this position. If you're down 0.5% or if you're down 1%, then you need to start thinking about it, right? Do you want to just take your losses and close, that 0.5%, 1% loss, so it doesn't turn into 7%, or do you want to wait for some kind of a trigger, right? I propose the trigger is probably going to be QQQ, right? If QQQ drops below this level, you want to be out of Google probably, because if you're down, if QQQ reaches, let's say 273, and you're down on Google already 2.5%, then most likely you're going to be down 5%, because it's going to 268. So the trigger is, some of your the rules that you wrote down in your trading journal. One rule was down 2.5%. Another rule was a stop loss, right? When you entered Google, I don't know at what point you entered Google, but I assume we talked about different support levels. Most important support level is either 276 or 280, right? We talked about 280 for the past, I don't know, couple months, right? The 280 is important level. So far, we're trading above 280 level or 268. Those are your 2 levels. So if we reach 280 and we broke through it, right? Because we reach 280, that doesn't mean you get out because, it's at 283. But if tomorrow if today we close it below 280 and tomorrow we close below 280, then most likely we'll probably head into 268, and that's where you would exit. You would exit position. Kevin, I don't use triple leverage ETFs. If I want to use triple leverage ETFs, I usually just buy options. Bill, what are the precursors to changing dollar direction? The only precursor, one precursor, it's extremely overbought, right? It's kind of just out of control. So you know that at some point it will drop. I think the perception, right? One could be is that, after PPI data tomorrow, and maybe after, retail numbers and, visit to the Saudi Arabia, when people come back on Monday, maybe they'll say, you know what, the worst of inflation is over, right? And we have peaked the inflation, and then the dollar drops because it's way overbought. That is a scenario that I think is the most possible, right? But right now, dollar is a fear indicator, right? There's a fear of recession, right? That's why dollar continues to go higher. And until we see some kind of, could be earnings, right? We have, Delta Airline, not such a great earnings, right? So Delta Airline, not such a great earnings, down almost 9%. Pepsi, pretty good. Fastenal, not so good earnings. So far, only good earnings, better than expected earnings can cause the dollar to drop. So far, there's not a lot of companies that announce earnings, but so far it's underwhelming. We'll see what the banks will say. JP Morgan, these are usually, you want to pay attention to your banks. Thank you, Bill. Any other questions? Screen share is blurry. Well, I assume it's an internet connection. Live stream to enter. Please see. Can you guys see my screen? Please see. Let's see how. Live stream button left side to join live stream. Or you can try to join go to webinar. Go to webinar session. Here. Let's see. All right, so Bill, you see blurry screen. Very blurred Valhalla. Okay, so yeah, blurry screen. So multiple people can mention blurry screen. I'm not sure, maybe it's because we do have a lot of people joining today, or more than usual. Sorry about that. I don't know if it's Discord, but if you're having hard time with the blurry screen, I did put the GoToWebinar link. You can go to the GoToWebinar link. We don't have that issue on the GoToWebinar today. Carmen, thank you. The JP Morgan is what's more important, the actual number for its forecast going forward, right? It doesn't really matter what the earnings right now, it's what JP Morgan will say going forward. What do they expect in the economy? What do they expect in earnings and interest rates? Yes, XLK, we do have 140K. So XLK, it's the same thing. I'm waiting to see what's going to happen. If this level will or will not hold. XLK, it's 125. So Rick, are there credit spread options to sell this week? Well, you see, and I have several examples. So I did 280 to, I still have 280 to 60 put spread. That's one credit put spread. I'm also in JP Morgan, right, going into the earnings. 108, 199 put spread. So those are the two put spreads that I currently have. Thank you, Bill from South Carolina. All right. Any other questions? It's 9:20. All right. Thank you, Rick. Thank you, Ted. Carmen, why do I buy? So the question is, why do I buy deep in the money calls as they cost more? Because because deep in the money calls or deep in the money moves puts have high correlation to the moves in S&P. Right? If you want, especially when if you decide to day trade, right? You want high delta, right? So if if spiders, move by $1, right? you want spiders calls usually to move by at least 70 cents, 70 cents or better. Right, so for every dollar move in spiders, you want spiders calls or puts to move by 70 cents. That means you have to buy deep in the money calls with delta 70 or delta 80, right? Because when you day trade, you want the moves in the stock to match the moves in the option as close as possible for day trading. Longer term trading, same idea, and the problem is just because something is cheap, it has very low probability. Because if the option is cheap, let's say it's only moves by 20 cents, right? It only moves by 20 cents. Well, then probability of this reaching its level is low, right? Only 20%. Think of the correlation as probability. This is 70% probability, right, that your trade could be successful. This is only 20% probability, right? Think of delta as probability, right? So if you do buy out of the money call, especially if you don't day trading, unless you have a violent move in your direction, most likely you will lose money. Thank you, Carmen. Bill, thank you. Rick, any too late for me to get in those? Any credit spreads available this or next week? I mean, ETF, right? I mean, it all depends on your view. If you want to do credit spreads, right? So I would look at technology, right? This is technology, and look at support and resistance levels, right? It's very simple. If you think that this level will hold, right, then sell 270, 260 put spread, right? Depending on how long you usually hold the position. I would go into September right now, and I would just sell 270, 260 put spread if you think this level will hold. The reason I'm not doing because I'm already in the trade. But right now it's your, or you can think that we're going to trade in this box, so you do both, right? You sell 270, 260 put spread because you don't think this 270 level will be broken. And you can sell 300 and 310 call spread, or 300, 320 call spread because you don't think 300 level will be broken. So that would be my trade, and that applies across any stocks you want to analyze. But that would be a core trade, right? You take ETF, it could be QQQ, could be Russell, something liquid, right? QQQ, IWM, spiders, and you sell put spread or call spread. Any other questions? Well, it do make sense. Thank you, Carmen. Bob, yeah, I think all of these are liquid names. So tomorrow, I mean, right now I'm in JP Morgan, so I have to make an adjustment. But yes, Morgan Stanley, TSM, these are all good Condors candidate. Right, Rick, Iron Condor, correct. Osama, thank you. All right, any other questions on Discord? Okay, put the trial. Okay, so thank you, Discord users. All right, go to Weber. Any other questions? All right, Samara, Raymond, Yuri, thank you. Rick, thank you. Mamadou. Mamadou, no, it doesn't matter if it's 10,000. It doesn't matter what the account size. The reason I'm limiting to 4 trades or 4 positions, because market is very volatile right now, and 4 positions, right? The main reason is that if you have 4 positions at 2.5%, right? And you can have choices. Let's say they're all bullish. Like, let's say you see, okay, QQQ closed the gap on horrible data. That's usually a bullish sign, right? I mean, that's a good thought process. So you have 4 times 2.5 positions, right? Okay, tomorrow PPI data worse than expected, and then market finally collapses and reaches 368, by tomorrow, right? So then 4 times 2.5, and all your 4 positions are down 2.5%. So you trigger, you down 10%, right? So that's the reason. I know that for majority of the people, this is a trigger, right? If you out of $10,000 lost $1,000, that would be a trigger for this fight or flight response, right? You're probably going to be losing sleep, or you're going to be really, really upset. Anything above 10%, anything below 10%, you're not really happy about it, but you can adjust, you can close the position, regroup, make adjustments, and move on. So I'm avoiding situation where your portfolio is down more than 10%. So for that reason, it doesn't matter if your account is $500 or $500,000. It's the same rule, right? Don't risk more than 10% of your portfolio at any given time, because ultimately nobody knows. We could end up by Friday close, we could be at 268 or we could be at 300, right? And unfortunately, people ask me all the time, Vlad, what do you think market is going to be on Friday close? And I'm going to say, well, it's either 300 or 268. I think it's going to be I don't know. It's still, I think it's probably going to be close to 300. Based on how the market behaving as of right now. I reserve the right to change the mind, but as of right now, we close the gap that to me looks pretty bullish. But again, things can change very quickly. But the point is, I don't know, right? But the point is, I don't know. So it could be at 300 or it could be 268. Stream available. Yes, all sessions are recorded and posted on yellow.com. All right, Lo, thank you. Mamadou, right. Hopefully that was Albert. Thank you, Mamadou. Thank you, Scott. Today, yes, Bob. Closing bell. Today is Wednesday. Yes, Scott will do the closing bell. Thank you. All right. Claude, thank you. thank you. Carmen, thank you. All right, let's see. Any other questions? Did I answer all the questions? Yes, I think I answered questions. 9:30. All right. I mean, closing today, tomorrow, Friday is going to be extremely important, right? I mean, today, very important, right? You know, if QQQ closed the gap on hotter than expected inflation, the only interpretation of this could be that, you know, inflation, nobody really cares about inflation anymore. Now the emphasis is, and market is oversold, right? So that kind of could be a precursor for this rally to continue, right? We're up, right? We're up, I mean, 10%, which is significant, but, you know, it doesn't mean it could not be up 15%, right? So we could be up another 5% from 390, right? That would be the only explanation for this, right? And divergence, right? You can have Treasury. At this point, I don't think it's possible for Treasury to sell off and QQQ sell off. And you can see kind of, you know, people are scratching their head, they're not sure what to do. So when they're not sure what they do, then the previous trend kind of stays intact. But again, too early to tell. I would, you know, we have a session with Scott the last 15 minutes. Please look at the yield. Please look at the dollar with Scott. See where QQQ ends up, right? Semiconductors got positive, you know, that's also positive. But anyway, and I think that will set the tone for PPI data. I assume PPI data is not going to be a surprise, right? I mean, CPI is a surprise. PPI is, I mean, I assume it's going to be already factored in. And then you only have Friday. So, okay. I'll see you guys at the closing bell. No, sorry, I'll see you tomorrow morning. On a few announcements, right? Or most people already left. All right, so on Yellow Tunnel, we're going to have, and on Discord tomorrow at 12 p.m., we're going to have another session on trading psychology, right? Current market conditions, how to build your trading plan, how to execute your portfolio rebalancing, portfolio construction. Tomorrow at 12 p.m., I don't trade. I, you know, spend an hour actually talking about trading psychology, which is important. So tomorrow at 12 p.m., please join. All right, Michael, thank you. Scott, thank you. Discord guys, thank you very much. You guys are awesome. We have a lot of people today. That makes me happy. And thank you. Sorry about the issue with the screen, but, you know, I posted the GoToWebinar link. You're more than welcome to join. All right, thank you. Take care, guys.